All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. It is Thursday, March 2nd, 2023. On a Thursday, 9 a.m. Eastern Standard Time. Thank you so much for taking the time out of your day to join me this morning and every morning. Let's go ahead and get started. We'll start with Around the Horn. We're going to go ahead and go over a couple of headlines that I saw today. Not much today, but then I really want to focus on some chart work. Is it time to go long? Are you ready for this? Because we are. And if you have listened to the podcast last week, you know that Nick was talking about getting a little more pain. And so far we're getting it. So are we close to start going long? Because we've been going short the past, week and a half so far? And so far it's worked. So let's go ahead and keep an eye. Let's take a look. First thing around the horn, the day, Dow futures down up 68 points. Bulk of that is CRM, that's Salesforce.com. They had their earnings. CRM pre-market. Let me get that actual quote for you guys on CNBC. CRM this morning, definitely having a nice day, up 16% at 194.70 this morning on a nice beat on the top and bottom line, and also the stock buyback. I believe is about 10 billion or 20 billion worth of stock buybacks. I'd have to take a look. Let me make sure of that to confirm. I just want to go and make sure. CRM beat on the top and bottom line. That's correct. Let's see if I can find stock buyback. $20 billion stock buyback. There you go. So again, that's boosting up the Dow futures. NASDAQ futures down 110 points, down 0.92%. S&P 500 down 0.53%. The Russell 1886 down 0.72%. Crude oil futures, again, still kind of just staying between 75 and 80. 78.12 up 0.57%. Gasoline futures $2.69 a gallon up 0.66%. 10-year Treasury yield starting to boost. We're above 4% now, 4.073. The dollar is above 105 again. That's kind of pulling back a little bit, 105.04. The VIX 2.5%, 21.10 currently. Gold futures 18.39 this morning, down 0.33%. Obviously, that's the dollar. 20.81 for silver futures, down 1.33%. The euro dollar was sitting at the 20-day moving average overnight. I was watching that, but it rejected 105.93, down 76 points. 136.92 for the dollar yen, up 72 pips. Pound dollar 119.46, down 80. So Forex has been really back and forth. The futures market has been very tough to trade. Obviously, the best thing we've been doing is trading options. Bitcoin futures down 0.36%, kind of holding up even though the dollar is down. The NASDAQ is underperforming that. 1638 for Ethereum futures, down 0.76% this morning on those futures contracts. All right, that's where we are. Let's go over some quick headlines here. I can bring this up on Twitter. Okay, here we go. And again, this is our official Twitter. Feel free to follow us at any point. Let's go here. Initial jobless claims this morning. Again, the labor market still strong. 190,000 claims versus the forecast of 195,000. Even less than last week, 192,000. Best Buy reported earnings $2.61 versus a $2.09 estimate. 14.7 billion met expectations. They raised their dividend 4.5% to 92 cents from 88 cents. The indicated yield will be 4.46%. Again, this is what happens in a rising rate environment. This is the key. These dividend payers have to pay more. Same thing with energy companies and these dividend companies. So the higher the dividend rate or the higher the bond yield rate, let's say a 2-year trading at 4.5% or 5%. Again, these dividend companies have to pay out more. That's more stress into their bottom line as more of their money is paid out to dividends. So keep that in mind. Let's see where Best Buy is this morning. Let me see if I can bring this up here. BBY. Best Buy this morning is down 2.5% pre-market. Insiders dip out. 450 executives, plus or minus, scooped up shares last month, but more than 4 times as many sold. It makes for the highest ratio of sellers and versus buyers since April 2021. That was according to Bloomberg this morning. Anything else that stood out? More than 100 billion has flowed out of equity mutual funds and ETFs on a combined basis over the past 13 weeks. One of the worst flow collapses on record. And then yesterday, the Eurozone February core CPI inflation rises 5.6% year over year versus the estimate of 5.3, largest annual increase on record for the euro. There is your pressure. Great. So that's where we are this morning. Okay, so first thing I want to go over is NVIDIA. We went ahead and took it yesterday with the team. Well done, 40%. I still have a runner going. We're starting to continue to go down. We're officially in the money. We're trading at 224.20. Our strike is at 225. So again, we just want to take a little bit. We want to make sure that we could squeeze as much on the runner as we can. But more than likely, we'll probably get out of it today as we expect to bounce, actually. And that's where we're going to segue to. Let's see here on SPX. SPX, we're above the 200-day. Obviously, we have futures that are going to change that. But here's the deal. Look at the SPX on the daily chart. 1, 2, 3, 4, 5, 6, 7 consecutive red sessions on the SPX. Not exactly common. The last time we had something that long was 1, 2, 3, 4, 5 back in December. We based for about a week, and then we continued to roar higher. How about before that? Before that, we had in September 1, 2, 3, 4, 5, 6, and then we started basing for about a week, and then we went higher. How about in September early 1, 2, or how about 1, 2, 3? Oh, just 3 days in a row, and then we bounced, and then we continued lower. How about June 1, 2, 3, 4, 5? We continued to base, and then we soared. So again, you can kind of say, I don't like to make it that simple, but when you get 6 days in a row red, it's time to be a little contrarian. Why do I say that? We're still above the 200-day on SPX, at least settled. We're above that trend line still. We still have a golden cross, true. Yes, we're below the 20-day moving average on SPX, but we do have some upside gaps to fill here at 40.89 and the one above, I believe, at 40.20 or 40, right here. Let me see here the exact number. 42.15. So we got a couple of gaps to fill to the upside. So now I'm already expecting, since I'm out of puts, I'm looking to buy. I'm looking to buy some calls here. Now, I may not do it immediately today, granted. But again, I'm going to see if we can get to around 39.20 SPX, which is that 100-day moving average. That's probably a place I'm looking to buy. Let's go and take a look at SPY together. And SPY, again, I put 2 yellow lines here. That's kind of our zone, our buy zone. Again, that's the level right around 391 to 390 where I'm looking for to play this bounce. That is the support level that we had back in January 20th. So again, we've had consecutive days of red with six consecutive SPX red days. We know what happens historically speaking, at least the past year. It starts basing afterwards for a little bit, or we continue to the next leg higher. So I expect that this is the worst of it. We're getting into March and April. These are bullish months. So again, I'm looking to go long with some cheaper calls. Obviously, since the put pressure is here, it gives us an opportunity to play some turnarounds. So that's kind of our thinking moving forward. In terms of the dollar, we could see the dollar is kind of rejecting kind of a double top, triple top here on the 1 hour chart. So I expect that to reject. That'll help the SPY trade. NVIDIA, I'm going to get out. There is a gap to fill here at 227.15. We're in the money. We hit our target. Great. Unfortunately, we just got 1 for 1 this week. Not a lot of action, but when you have so much choppiness, it's best not to just push the leverage or push any kind of risk on. You don't need to. Again, let the market work for you and see what happens. I went ahead and did Amazon for masterclass as well. They are green this morning. We had the 90 puts. So that's really the only action that we have. There's a gap to fill on Amazon right at, let me see if I can bring this up here. It's right around 90.40. So I expect that to be tapped. And if not, I'm going to get out as pretty much probably today. I'll just get out of that. Take some profits. May not be 40, maybe 30%. That's fine. But again, I do expect a bounce coming up into March. Now, you're probably saying to yourself, well, Carlos, why do you think that? Of course, why do you say that we're going to get that? You know, seasonality, is March really bullish? We've talked about how important seasonality is, so let's bring it up one more time. Let me see if I can bring up seasonality. There we go. Let me bring this up again. All right, so again, we're kind of following that that little bit of an analog. Obviously, we're in March 2nd. So again, we do get a nice little boost, at least in the beginning of March, and then we'll get some sideways action, more than likely FOMC, and then we'll get a little more boost into March. Again, based on seasonality, so far it has worked out for us. Look at this, end of February weakness, 6 consecutive sessions, sounds about right. So again, we're going to keep that in mind. We're going to obviously play the charts. We're going to see the flow, see where everything is going. But again, now it's time, in our opinion, to start looking at calls, upside calls. What are some of the targets? 40.50, 40.30, 4,000. Again, you could start staggering looking like that. If we go and take a look at SPY, let's go and take a look one more time. If we were to play long, I'm going to go ahead and take away this alert. I'm going to keep an eye and see if we can get above maybe 394.50. If we do, then I would trade the 398 to 399 calls for next week. There's nothing I'm going to trade for this week expiry. It's already Thursday. So if anything, it's going to be to next week. So we'll go ahead and see what we get moving forward. We're still hovering around that support that I had of around 39.30 ES. We'll see where we get. We're right at the 100. We'll see if we hold. Arcaday is asking, can you please explain why a company's guidance weighs so much on the stock price after a company post beat on the top and bottom in case of snow? Keep in mind, when a company is reporting earnings, that's already late news. That's probably already priced in. So what you get in terms of good guidance is kind of a reason to buy their stock in the future. If they have weak guidance, then this is pretty much the best we're going to get, at least for the short term, until next quarter. That's why it gets sold off immediately. Same thing with an increase in dividend. Buybacks tend to do very well in terms of trying to get people to buy the stock because you're removing the amount of supply of outstanding common shares because the company is buying themselves. And I like when a company buys back their stock, obviously, because it shows that they're have faith in their company. Again, that's a line item on their balance sheet if they own shares, and it happens if it goes lower in value, that hurts their bottom line. So again, when a company is saying we're buying $20, $30 billion of our own stock, that's a really vote of confidence in their stock, and that's usually when you see stocks push higher, at least aftermarket, usually. But when it comes to guidance, again, if a company misses their forward guidance or their forecast, now their ratio in terms of price to earnings are a little different because that earnings have changed. And then again, if that earnings change and you're telling me that the prices remain the same, that becomes overvalued based on what the forecast was last quarter. So again, the investors are always looking for one thing. We're looking for consistent profitability and we're looking for growth. So again, consistent profitability can be like a Coca-Cola, Procter & Gamble, Waste Management. Those guys, we know they're not a lot of growth in garbage and soda and deodorant. But when you're talking about a Snowflake, cloud-based, we need to see some growth to justify us owning those companies. Because if they don't have growth, then why the hell am I putting my capital in them, especially in a rising rate environment when you're getting a 2-year at a 4.5% pretty much risk-free? Why would I want to own a Snow? So again, this is where growth companies need to really get aggressive, either in buying back their shares, beating their forecast, or having higher than expected forecasts and really pushing to make sure that they can compete for that scarce capital, scarce meaning that, money printing is down, to be investable with your capital. That's really it. XLV calls. Let's see, XLV. XLV doesn't have a ton of volume. I want to say this is the healthcare ETF or the service sector ETF. But yes, we have a gap to fill. Let me see by my here. You have a gap to fill here at 126.85, so it has been filled. I don't hate it, but you're just not going to get a lot of volume on those calls. So Austin, I wouldn't trade XLV. Those spreads may be a little wide. In terms of focus on options, obviously I'm going to focus on ETFs. I'm going to focus on tech, things with big volume that are traded daily. Tesla is down this morning, so let's go ahead and go over that. Tesla's the one that we traded a lot, obviously. In terms of levels, 172.72 is a possibility. We do know that was the earnings push higher, I believe. No, it wasn't. We have a gap to fill at 146.19. We are now below the 20-day. We are now at 186. Make sure where we're at. Yeah, we're right around here. If you start breaking below 183.88, then you're going to see more pressure on Tesla, where you may be looking at retesting the bottom end of this breakout range back from the 2nd of February to 172.99. So it's about a $10 move, possibly if we break below 183.88. And if that breaks, then we also have a gap to fill again, 146.36. That's a continuation gap. We have said on Instagram that doesn't happen really rather quickly. It does take some time. So again, we'll keep an eye on Tesla as we go. How is guidance calculated or forecast? It's a combination of a survey of all of the analysts that focus just on that one name, and then they bring out all those forecasts together ahead of time. And then Bloomberg or whoever, Reuters, make a collective number saying, this is what analysts are expecting. When you ever hear guidance, They always say analysts are expecting. So again, does it really matter in the big game when analysts are expecting? Well, that's their job. Their job is to focus on these companies. That's their only company that they focus on, for example. So again, they're very in tune with the company's movement, executives, and forward growth or forward guidance. At least they have some kind of hint. But I mean, results are results at the end of the day. It's like a report card. Could you have a guidance on your son or daughter's report card for next 9 weeks? Kind of tough, but consider yourself the analyst. If you're a parent, you're more in depth with your son or daughter, teaching them with school, and you have an idea about their grades since you speak to the teacher. Speaking to the teacher would be speaking to the executive of the company, such and such. So that's really where you get that kind of survey expectation is just from the analyst. That's all. But again, at the end of the day, you have a vote. If you're a shareholder of Snow, do you like the forecast? Do you like their numbers? If you don't like them, you sell them, and if you like them, you hold or you buy. At the end of the day, it's very democratized. You decide what you think is best. So again, that's really just calculated by those analysts in the back office of those Wall Street banks, where that's all they focus on is that one company. Apple has a ton of analysts focused on their company. Tesla, ton of analysts. So and so on and so forth. Snow, I'm not really sure how many analysts. And then if you go, you could see their buy ratings. It's all public and everything like that. So interesting stuff. But I wouldn't put too much weight on what an analyst think. Obviously, you want to know what the price action is. The market tells all. There's companies that have missed earnings or missed estimates. Apple missed earnings and estimates, and what happened? It bounced the next day. Apple's a great company. A lot of people are different. They see the picture differently. Some people see long term. Some people see short term. It really depends on your perspective. So again, that's where we are this morning. I'll probably be taking video this morning with the runner, and we'll keep an eye on some opportunities to play some upside calls. So we'll let you guys know of any other news on Twitter as we go along. Discord members, any new trade will be sent on Discord as always. So far, a pretty quiet week for the most part, 1 for 1. I mean, can't really get too upset, but that's where we are, and we'll continue and see if we can make it a better week. Let's see if we can, well, not better week, but let's see if we can get another one for the road. Have a great rest of your morning. I will catch you guys tomorrow for the morning note at 9 a.m. Eastern Standard Time. We will see you there. Cheers.